Hi there, Serial Trader here. I'm going to check in on the US markets as I feel there's something worth updating you on. So here's a chart of SPX, the S&P 500 index. So here's what I'm going to currently put up as my primary wave label count here. So you got 1, 2, 3, 4, 5 down for A, ABC up for B, 1, 2, 3, 4, 5 down for C. And C didn't actually make a new intraday low below A, but if you go to a closing price chart, let's have a look here. Closing price chart, it was about as close to a double bottom as you're going to get on a closing basis. So that, and because it does have that nice 5-wave structure down, once we go back to the intraday, there we go, bars. Because of that, it does meet the minimum requirements for an ABC down. And I'll also remark, let me get this out here. So one thing you want to do when you're trying to determine whether something's going to be an ABC down zigzag or a 1, 2, 3 down developing impulse is, so you got your first leg down, right? So you go from the origin of the first leg down to the termination point, draw a trend line. Now that's the slope of the first leg down. Now drag it over to the origin of the second leg down over here, and if you can see, the slope of the second leg down is shallower, okay? Less extreme, less violent. So if this was a 1, 2, 3 down, wave 3 normally should have a steeper slope, be more violent than wave 1. But in ABC, you'd expect C to be shallower in slope, less violent than wave A, which is exactly what we have here. So you see this to actually, that's the slope of wave C, whereas A was more like that, right? So that's, as far as slope analysis goes, that's favorable for that. And then obviously, if we had our bottom here, and then this blue line just shows kind of what the expectation would be, eventually making new highs in the next wave up. And you can see, I mean, this stochastic is bottomed out, starting to roll up. RSI got oversold again on that intraday low, and then starting to come up. MACD histogram starting to show some weakness for the bears, starting to roll up for the bulls. So reasonably favorable on those indicators. So let me go over to the other style chart. And SPX once again, this time candlesticks. I also want to alert you to this. So today we did a bullish engulfing candlestick right here, okay? And that just means that the real body of today's candlestick more than fully engulfed the real body of at least one prior candlestick, in this case, yesterday's candlestick, okay? And that's just simply a visual depiction of opening lower than what you closed at the previous day and closing higher than what you closed at the previous day, okay? I should rephrase that. Opening lower than what you opened at and closing higher than what you closed at. So you more than fully engulf the opening and closing range, if that makes more sense for you. And we closed above the T line, okay, the 8-period exponential moving average. So that is a positive development, because if you look at this, we've just been below that T line and failing to close above it this entire time until today. So think about that for a second. We have oversold conditions. We have a potential double bottom using closing prices. And we have a actual bullish candlestick reversal signal with the bullish engulfing and a close above the T line. So it's definitely early, but for an aggressive trader, that's a nice setup, okay? And we're also just using moving averages. That 200-day simple moving average, that has obviously been difficult for bears to break through. So that might just be a nice natural support level as well that we're coming off of. Okay, I just want to show you the Dow Jones Industrial Average. So very similar. Again, that 200-day moving average, very difficult to break. And actually, the Dow made a marginally lower low, okay, on this second leg down than its first leg down. And if you look at the slope, let's bring that over there. So the slope is way shallower on the second leg down for the Dow. So clearly an ABC correction going off of that, right? So, I mean, look how much that's way shallower. Okay, and the Dow. So the Dow did a bullish engulfing as well. And it closed above the T line. And the Dow engulfed, at least that prior candle. You could argue it fully engulfs, you know, 4 prior candles. Well, maybe not quite this one. It's really close, though. Anyway, so that's another candlestick buy signal and close above the T line. Very positive looking. And I'll also mention, okay, so SPX did not make a lower intraday low, but the Dow did. That could be considered a bullish non-confirmation when one index does not confirm what the others did. And just like there could be bearish non-confirmations when the NASDAQ made a new high, but these other 2 indexes didn't. And it led to a nice spill down. It can work the opposite way too, in this case to the upside. So let's go with the NASDAQ to have a look at that. So the NASDAQ, it never actually touched the 200 on either occasion, but you know, got close. Oversold conditions like the others. And again, it wasn't quite the same count because we did actually make a new high in that leg up, whereas the other 2 didn't. But more importantly, we have a bullish engulfing, very clear, after kind of a doji day yesterday, and we clearly engulf at least 2 prior candlesticks here. So that's a powerful candlestick reversal signal, and well, we're basically at the T line for the close, so not quite as good on that element of it, but still, considering all 3 indices, and also a lot of individual names, you know, individual stocks also had reversal signals today and closes above their T line, so that's quite positive. And okay, one last look here. So the VIX. Now the VIX never actually made a higher high. It ran into resistance here, just been kind of going sideways, and now the VIX closed below its T line today. So basically the volatility never picked up, so you had higher volatility in that first spill down in what we can call wave A on SPX and the Dow. And now on this second leg down that may now be over as of today with that nice reversal buy signal, we had a much lower level of volatility increase. So if this was going to be a big third wave down and a big bear market kicking off, one would expect that VIX would be higher now or trending higher now than it was at the beginning, and it's not. So that's a positive development. So I think I'll leave it there. And it's still early. Certainly be better tomorrow if there's more positive trading and additional closing above the T line. But for an aggressive trader, this is a nice bullish entry, not just for the indices, but for a lot of individual stocks as well. I think I'll leave it there for now. Serial Trader signing off.